talking about an overnight travel. Okay. Somebody is traveling overnight for business purposes. As I told you always, I want you to keep in your mind a sole proprietor when you're doing all of these deductions. Okay. So the first question is, what do you mean by travel? Travel typically means you're traveling outside, you're outstation for business purposes. Okay, so as a Deloitte auditor, we used to do a lot of these outstation audits, right? But it used to be like within a vicinity because it was very rare. So I was in the eastern zone. So generally, we used to have offices in south, west, and north who would take care of people of the clients there. But sometimes there used to be a situation where, for example, HLL had a factory in Northeast, which we had to visit. ITC had factories in Munger and stuff, which we had to visit, right? So, as employees, at that point of time, I was interning with Deloitte. But at that point of time, whenever you go for an overnight travel, there was something called a travel expense statement. Most companies have it. We call them very popularly as TE statements. And you've got to fill this up and give it to the company. The company reimburses you for it. And it will also have something which is called a per diem rate. So it will be something like this, depending on what level you are in. You're an intern, you're an associate, you're a manager, you're a senior manager, you're a partner. Your per meal rate, the per day rate for miscellaneous expenses and meals were also fixed, irrespective of how much you are incurring. Okay. So how much of that will be allowed as a deduction? That's what we're going to talk about. So you have submitted me a TE expense, and in accounting records, I have already given you a deduction, right? Now, how much of that will be accepted by tax? That is what we are going to learn. Remember, it will be deductible only if that trip is related to business, of course. It's ordinary, necessary, and and it's necessary and it is reasonable, including meals. So if you're going outside and you're eating, the per diem rate for meals, you're not going to apply separate rules. You're going to apply it meals rate, but you're going to get it under travel. And very importantly, it must be an overnight travel. If it's not an overnight travel, it will not be regarded as a deduction. Now, certain things you need to know. The rules for domestic travel. So, what is domestic? Domestic means within the US, obviously. International means outside the US. Sometimes it might so happen that for 2 days I'm within the US and then I leave outside, or the other way. I leave outside and then I come back. I stay in 2 days, which is at a different location, and then I come back to my home location. So, what are the rules for domestic travel versus international travel? Now, this is easy, right? The rules are only for these two. In this case, you're just going to break it into the domestic part and the separate it, domestic and international, and then apply the rules thereafter. So, these are the two rules that we need to understand. Again, the language in which it is written sometimes is very confusing in most of the books, right? So, what I want you to do is understand the concept. And then, if you read your book, you will see that's so simple. What are the rules for domestic travel? For transportation, right? For the purpose of traveling, since it's an overnight travel within the US, so I'm going from California to New York. If that's happening, then I'm paying for a flight rent. I'm paying for the flight fare. Now, understand that it might so happen that it's a business trip, and let's say it's a 1 week trip. And in 1 week, for 5 days, I'm going to attend a webinar for my business. And for 2 days, I'm spending the weekend there and I'm going to go for a personal visit to my aunt's place there. So I'm overstaying my visit by 2 days and then I'm back in 7 days. So the first thing that any taxation authority asks you is, was this trip primarily for business or for personal purposes? If it is primarily for business, how do you determine this? On the basis of the number of days stayed. Okay. So in my example, it is five for business, two for personal. So this is primarily business. Had it been opposite, then I'm going on a vacation and for 2 days I'm going to do some business work there. Then it would have become primarily a personal trip. Now, if you are traveling within the US, the tax laws are very clear. that the airfare will either be allowed 100% or it will be disallowed. There will not be any split of the airfare. That means what? First step is what you're going to determine. Step one. The first step in domestic travel is it primarily for business? If yes, then the airfare will be full 100%. And if no, then the airfare will be 0%. So they are saying that you're coming and going. I will not let you split between business 5 days and 2 days. Either it is allowable 100% or it is disallowed. But if it is food, your hotel bill, lodging, that I'm going to allow you to split between your number of days that you have spent for business and the number of days you have spent for personal purposes. So domestic, first question, is it primarily business or is it primarily for your personal purposes? Business, 100% deduction for airfare, and you split the food and lodging. So your per day stay cost and your meals cost, you're going to split. But if it's an international travel, you're going to split all. Okay? So in this case, split all. And in this case, split only for meals and lodging. Okay? So allocate everything, even your airfare costs. All your airfare costs, food, lodging, everything will be split between business and personal purposes. Now, one thing is very clear, that they will assume that the trip that you're taking internationally is for business. If it is at least for a week and at least you're spending 1/4 of your time for personal purposes. That means I will allow you to allocate. So you go for a trip for 40 days, out of which 1 day you spend for your personal purposes. There's no reason to split. You get the full amount as a deduction, taking it as a business expense. The question of splitting comes when the portion of personal use is also a little bit significant. So that's the reason we say that at least 25% of the time you should be spending on non-business activities. You go for a trip for 2 days, and if it is mainly for business, you just take it as a business expense, take a full 100% deduction. So only if it is longer than a week and you have spent more than 25% of your time for your personal purposes, that is the time when I'm going to allow you to split all the costs between your personal and business use, depending on the number of days that you've spent on either of them. Part personal, part domestic is very easy. You just split everything. And the part which is related to domestic, you apply the domestic rules for it. And the part that is relevant for international, you apply the international rules for it. Is this clear? Very easy. Now you just solve certain questions from here and you will be sorted. Okay? One thing again, it's very important. No deduction for the spouse. No deductions, and this is commutation. When you're commuting from one place to another, generally for your place of business, you don't get any tax deduction. Also, no deduction if the place of business that you're going is indefinite. Now, I was planning to open an office in, let's say, so I'm staying in California, I'm a CPA or I'm an EA and having a very good tax practice. I want to set up another office, let's say in New York, and then I'm going to send some of my people to set up an office to just explore how New York is. So they go, and at that point of time, I started giving them business deductions for these expenses. But then gradually they started getting deeper and deeper into it, and we realized that no, we are going to set up an office. So this travel became indefinite. The moment that happens, the business is very clear. The tax law says that if the period of stay is indefinite, then I'm going to assume as if you shifted your place to a new place. And again, no travel deduction. Now, see, understand, guys, in this area, one very big delta is when you read a question, you should ask yourself, what is the call of the question? 10 to 1, you will get an expense as a business deduction. So the split between business and individual is not a big deal. Whether it's an individual deduction or business is not a point. The next question would become, if it is business, how are you going to get that deduction? Are you going to get it in travel, in meals, in taxes? So read that question also. Are you going to get a deduction? If yes, how? And understand what is the question asking you. Sometimes you know you will get a deduction, but then the question asks you, is it a tax deduction? The answer is no, it is a general business deduction. So you will not get it in tax. So read the question very well. No travel. If you are traveling for attending business meetings, there will be no tax deduction. If you're traveling as a form of education, somebody who's teaching Chinese would go to China and just improvise on her Chinese speaking skills. Again, no deduction for that. And if I'm going, so, suddenly, if let's say, at some point of time, let's say I'm just assuming Warren Buffett starts giving you personalized financial planning webinars, and I book a flight and I go there and I start attending his webinars. Now, the logic that tax department says is very clear. They say that, see, most of these financial planning investment webinars are for individual needs of a sole proprietor. You cannot call it a business expense because this is for you to increase your returns on your investments. It has nothing to do with the business. So no tax deduction for all of this. Okay. Again, this is something which is more tested in part one rather than part two, because in part one, when we're dealing with sole proprietorship expenses, this is that time when we're going to realize this. And it is tested also heavily there, not here. Here, they've just mentioned it to you. In case if you're deducting any automobile expenses, either you can deduct your actual expenses, and with that you can add parking fees or tolls, or you can just take a standard mileage rate, which is 0.585 per mile for the first half of the year 2022, and another for the. So these are indexed figures, guys. These gets changed every year. Okay. So it's either standard mileage plus parking fees tolls, or it is your actual expenses plus parking fees and tolls. Okay. Okay. One more concept before we move on to the questions for the travel. Now, see. Okay. One sec. Okay. One more concept before we go to the questions. Now, see, whenever you are including, so let's say I am the business. Okay. I am a owner of a business and I have uh, Aswin and I have Roji who are working for me as employees, just for simplicity's sakes. Okay. Now, if I pay some dollar to you guys, okay, if I have to claim that as a deduction for taxation purposes, then it cannot be your income. Okay, because in that case, if I'm spending, I cannot tax it at. So here I get that employer gets a business deduction and the employee will also not be paying tax. That means we are not regarding, this is something by which, it's something like I go and pay, pay for certain goods. I don't get a tax deduction for that. Okay. If I don't get a tax deduction, then it will be included in the uh, employees form 1040 as an income, and I will not be allowed a deduction for it. Okay. But if you don't include it as an income for the employee, then you get a business deduction for it. Okay. So look at this. What are accountable plans? Any kind of an expense which once made in an accountable plan simply means that the business has a plan for it. There's a written record. If somebody is going for an overnight travel, these are the routes. If there is something like this and you have to account for it. So I am representing my company for a webinar which is happening outside, and the company pays me the amount and says, you go and when you incur the actual expense, you let us know what those expenses were. I will reimburse it to you. So when the reimbursement happens for the full amount that was expended by somebody else on behalf of you as an employee. So let's say I have Ashwin and Raji and I send Ashwin to represent me in one of the locations in South, and Ashwin goes and starts representing me. So if he goes and stays in a hotel or spends something on the meals, and then he comes back, submits me the bills, and I give him the actuals. If it is something like that, and he gives me proper bills and everything, then it is just like an expense, a business expense. So this is just a simple business expense which my employees have incurred on my behalf. Rather than me going and attending that, I am asking Ashwin to go and attend it for me. In that case, I simply get that as a deduction. Ashwin books nothing as an income, and it is called an accountable plan. But if there is a plan in which I tell Ashwin and I send him 10,000 rupees and I say, you just go and spend whatever, whatever you spend. Otherwise, whatever is left, you keep it with you. That's a non accountable plan. Either I don't want Ashwin to give me the records, or if uh, if the expenses are, if the reimbursements are more, that means I pay 10,000, he incurred only 6, he is not required to pay me back that $4,000. In that case, it's a non accountable plan. The employee has to include it in his income, and it is not allowed as a deduction for the business as travel. Please remember, I will get some deduction because I'm paying, but it will be like salary. There will be a deduction as salary or compensation, but no deduction as travel. That's what we're trying to say here. We have a question on this. We'll do this, and this will become clearer after that. One last thing you need to remember, that you need to keep all the documents, but we need it only for an amount which is higher than $75. If it's anything less than 75, and if it is not for lodging, I really don't want you to substantiate it. Also, when you're giving me a substantiation, just a cancelled check is not relevant. You have to submit me the invoices of your